Hey everyone, welcome to today's sip. Jody is coming in. We'll be here in just a second. How you doing, Josh?
I'm doing really well. Thank you so much.
Great. Thanks for joining us today. Oh, here's Jody. All right, I vamped a little bit, Jody. Sorry, everyone. I was in the middle of Scottsdale prep and missed my cue. So off to you, Jody.
Looking forward to seeing
No
you in Scottsdale.
worries. No worries at all. So it is a case of the very first episode of The SIP in the new year. We have been off for an entire month and we're getting back into the swing of things. So thank you everyone for bearing with us. So for the sake of time, we will go ahead and get started. So the SIP, welcome back. This is where the conversation sparks connection, collaboration inspires innovation. Industry leaders tackle today's biggest challenges. Think of it as catching up over coffee. If you're doing a dry January or maybe an adult beverage, where insights that we talk about insights that move us forward. At the Mortgage Collaborative, we're passionate about empowering our members to thrive. Today's show is featuring real world strategies and perspectives that not only from working together, but also moving forward together. So, Happy New Year to everyone. Thank you for joining us. And the first show of 2026. It is proudly sponsored by Lendware, formerly known as Adium, a company undergoing an exciting transformation. And representing Lendware today is Josh Glantz, the CEO. Josh recently stepped into the CEO role and is here to share the story behind the rebrand, where Lendware is headed. And Josh, welcome to your first appearance on the SIP and congratulations in your new role.
Thank you, Jody. I'm really delighted to be here today.
Awesome. We're going to go ahead and dive in. So, Josh, tell us a bit about yourself and your background and your journey into the CEO role at Lendware and what drew you to the company and the industry.
Sure. Well, I have about 30 years of experience building internet and technology companies. The last 20 of those are really building vertical SaaS companies. So those would be software companies that deal with a very specific vertical instead of companies that try to work across many different industries. Uh, One of the things that really drew me to Lendware was I actually have an identical twin brother who's in the real estate world, and he talks to me all the time about how he has thousands of contacts, but he does not have any great way of managing those contacts and building his business and really tracking where and how well he's doing. And he's been a 1099 employee for a long time, and so that's something that's always resonated with me and been in the back of my mind. Um, I also have a mortgage broker who I've become very close with over the years, and who talks to me all the time about different things going on in my life and his life, and we've built a relationship. But recently I was working for a company that was providing a CRM software platform in a totally different vertical for nonprofit organizations, and I got contacted by Lendware. Actually, it was Adium at the time, and they were looking for somebody to help them figure out some of the blockers in their business. And I took a look at it. I saw what was going on in the industry overall, um, and where there were opportunities to really grow. And I got really excited about it in the middle of 2025 as things were starting to loosen up in the
Yep.
mortgage world, and decided to take a jump. So
Awesome. Yeah, we hope that they continue to loosen for the sake of all of our lender members.
I'm
Um,
confident there's a lot of momentum right now.
yeah. But for those that aren't, familiar with ADM or with the new Lendware, what does Lendware do in the data space that solves problems for lenders?
Sure. So I'll go back a little bit. Um, Adium was built as a CRM platform. Adium wasn't, and Lendware isn't, the software partner for the Mortgage Collaborative. And I'll get to that in just a little bit. But really, what we do is like nobody really loves their CRM platform. Nobody really says like, I can't wait to open up my software, my CRM platform in the morning. What they really want is a way to build their business, make more money, work with their clients better and more closely, and do it with less effort. And we know that loan officers are working a million hours a day, and they're trying to keep track of a lot of different things going on, and process and people and contact information and documents. And the most important thing that we can do is to make their lives easier and help them serve more of their clients, help their clients achieve their home ownership dreams and achieve their financial goals, while also allowing and enabling loan officers to make more money, work less, achieve their own financial objectives as well.
And let's talk about the elephant in the room, and then we'll go back to product, or should we say the rebrand in the room.
Sure.
So,
Yep.
Adium to Lendware, the name is very different. The colors are very different. That's a big move. So, walk us through the decision, why the rebrand was important. What does Lendware represent for the company's future?
There are a lot of questions in there.
Loaded.
And and I think it's really important to, I think, first anchor on the fact that Adium actually built great software. And we have clients who love our software. Again, not everybody loves their whatever software, their blank software that they use, but we do have clients that love it, but not everybody does. Not everybody did. What happened, though, over the last year and a half or so was first and foremost, we all know the challenges that the entire sector faced because of high interest rates. And with high interest rates, mortgage originations and refis really, took a massive hit. And at the same time, Adium made a strategic decision to try to go upmarket and try to go after the largest enterprises. When nobody is originating new loans, nobody's refinancing new loans, their existing loans, lenders just weren't going to be spending money. And so there was just a timing mismatch. And the company ran into some challenges because of that. And that is why I'm here, to refocus the business on a core target customer with a mission that we are fully prepared and capable of delivering on. And with me coming on board, changing the focus of the business and building out some new products that I'm really excited to talk about, rebranding was a natural extension of that.
Mm-hmm. Yeah, it's interesting. We have TMC has a platform that is also going through a rebrand, and it was for the very purposes. It was a platform that has been around for 8 years, and it's on like revision number 27, and we want to just start from a new slate, and which includes the rebrand. So people can look for what I'm talking about at conference, but it does bring a fresh new perspective to existing companies.
Yeah, agreed. When you're changing your approach, starting with a blank slate can be much easier than trying to get people to think of an existing brand in a different way.
Yeah. And we're, same approach, different colors, different everything, just so that people don't have the preconceived ideas about the solution that they had before, to try to get that mental block out that this is something that's completely new and different, shouldn't be compared or referred to the previous platform. So totally understand that. I'm going to try very hard not to refer to you as ADM in the
That's
future.
okay. We still haven't completely changed every single
Yes.
part. Like we still have
Yes.
the ADM email addresses. That's
Yeah.
going to change probably in the next
Yeah.
couple
Yeah.
of days, actually.
Yeah.
But we're
Yeah.
almost there.
If you could keep the B, that would be great. So
I
friends of mine were golfing in Colorado and found an ADM golf ball with the B, and they sent it to me, and they're like, "Don't you know these people?"
Wow.
So it was awesome. So I immediately, it was where it was in Colorado. I immediately text Spencer and be like, "Hey, did you lose your ball?" And he was playing that course like like
No
the week
kidding.
prior.
That's awesome. I love it.
Yeah.
I
Um,
would say that we are busy bees in
yes.
how we're building our software and our platform.
Yeah.
Currently, the bee is not part of it, but
Yeah.
you can always
Yeah.
make a comeback.
Yeah, it's like a little mascot.
That's right.
Josh, we've been really excited to get you participating in the Mortgage Collaborative in our events, and I think you have seen some of the ways that we are unique in the industry, but what we do something twice a year, which we do a pulse of the network, where we survey our lender members and concentrate on what their initiatives and focus are. And just this morning, the team gave me the results of the latest survey.
Uh-oh.
I'm not going to give you those results because we have a big splash coming out, but in the last survey, the primary focus was implementing technology and or evaluating tech stack. Then it was business development and grow your volume and market share. And then other ways to be able to create revenue were at our lender members top of mind. There's been a little bit of shift in the priorities. So
I
it
bet.
feels like a lot of our lender members have gone through the at least evaluating tech stack and starting to make some strategic decisions around tech stack, but ways in which to increase revenue has come back to the top of what individual initiatives are. And I think that that plays directly into what you're building at Lendware. So, how does Lendware fit into these priorities, and how are you helping lenders tackle their challenges for 2026 and beyond?
Well, first of all, it is not a surprise that lenders would be thinking about how to generate revenue, whether through technology or otherwise. It
Yep.
I would even go so far as to say that in the previous survey, if evaluating or implementing technology was at the top of their list, it may have been not purely for evaluation and implementation sake, but still for revenue generating sake, or just like a I just I don't think anybody really wants to implement or evaluate technology at this point, unless there's a way for them to do better as a business,
Yeah,
build a better lifestyle for their employees and for themselves.
absolutely.
And so revenue really has to be the bottom line for everyone. And ideally, it's profitable revenue with better margins than what they've been seeing. The margin compression in this industry is, a story that continues to tell itself, and
Yeah.
hopefully we will be able to help our clients continue to actually improve that spread.
Yep. So you want to dive into Lendware Predict and how it helps mine existing databases to find opportunities so you aren't constantly chasing a new relationship?
Sure, I would love to do that.
Awesome.
Um, the whole idea of Lendware Predict is that um, historically, we have not been a lead gen company. We know that loan officers and lenders spend a lot of money buying leads from Zillow and other sources. Um, Essentially, though, that when they're doing that, they're buying them on a per lead basis. They may or may not be following up on all of them. They may or may not have any insight into how qualified that lead is. And they also don't know how many other people are paying for the exact same lead. At the same time, we also know that our clients have anywhere from 1,500 to 10,000 clients or contacts, I should say, in their existing database that they've built up over the last 1 to 30 years of being a loan officer. And for the most part, they're sending out monthly or quarterly emails with an update on the industry, or they're sending out an annual birthday email, but they're not often enough spending time building a relationship and really understanding what's going on in the lives of those people who are in their contact database already. Lendware Predict changes that completely. And what we do is we'll look at your database and we will overlay over 1,500 data points that we have access to from our partners that are everything from demographic information, financial information, and other life event information, as well as certain information about their home, their neighborhood, et cetera, in order to determine which people in their contact list are higher likelihood to want or be open at least to a conversation about a new mortgage, a HELOC, a refi, or other loan product.
And then I saw you give a score indicator and I'm assuming that the higher the score, the greater likelihood to transact. So, kind of what is the threshold that lenders would be looking for, and what does that number mean?
Well, if you think about it really objectively, every score that we give will tell you something about their propensity. So even if somebody gets a score of 50 out of 100, that person who has a score of 50 is more likely to be open to a conversation or have a specific need right now than
Yep.
somebody who has a score of 25.
Yep.
What the whole purpose of this is, again, if we think about what I said earlier, our objective is to help our clients earn more while working less.
Yep.
Right. If you want to continue working the same amount, you'll learn a lot more. But if you're a branch manager or you're the owner of a bank, of an independent mortgage bank, and you know that you have loan officers who on average will make 10 phone calls a day or 50 phone calls a day, wouldn't you rather that they know that the people that they're calling are a higher likelihood to
Yep.
do something than just a name in a database?
Yeah.
And that's what we're giving to you. So every day we'll give you the 3 highest or the 5
Yep.
highest scores in your database. And what we really want is for you to be talking to the people who are at a 90 or above. And that's where what the difference is in this product to anything else in the market. This is not a trigger lead. This is not a somebody who just went on to Zillow and maybe looked at a home, but may have, is just really doing some research on what's going on in their neighborhood, which I know I do occasionally, but that doesn't make me a good lead.
Yeah. Well, too, I mean, loan officers have a knack for getting to know their clients, but it's not humanly possible to be able to know 1,200 data points and what those data points mean across thousands of, of individuals within your database to be able to figure out who is ready to transact. So I definitely see the importance, and that readiness score is definitely points out who needs to be called and what the priority is, which many people definitely struggle with, setting what their focus or their priority for the day should be. The from Sorry about that, but we have some people would say, because when we think about this, I think that there's this misconception with the trigger lead legislation coming into place in 2020, March of 26, is that lenders think, oh, well, that then I'm protected. But they don't realize that if you're calling on a lead that was a former client of another lender, that they still can get access to that credit pull, or the servicer can also beat you to it. So I think it's important to kind of, you know, point out the fact that this is not based on when credit is pulled, because you're too late then. You're talking about very early stage, like they don't even know that they're thinking about a
Correct.
transaction, and you're able from the 1,200 data points to be able to say, hey, they're thinking about transacting whether they know they're thinking about transacting. Is that correct?
That's right. It's very easy for us to tell our loan officer clients that Jody Hall has a mortgage at 6 7/8 right now.
Yeah.
And oh, look at that. New interest rates came out there at 6 1/4. You
Yeah.
should call Jody. Like, that's easy. And we should all be doing that every day. But
Yeah.
what if Jody has an interest rate that's 3.5,
Yeah.
and interest rates are at 5 3/4? She's not going to want to refinance.
Yeah.
Except, what if we also know that Jody has $48,000 of credit card debt at 24.99%?
Yeah.
She may want to have an opportunity to retire all of that high interest credit card debt, and maybe
Yeah.
the only way to do that is to access some of her home equity.
Yeah.
The same thing, Jody might have twins that are 16 years old, and might all of a sudden be realizing, holy cow, I have to figure out how to pay for college.
College. Yeah.
And so we can tell you what's going on in Jody's life that are totally outside of the black and white information on her existing mortgage, that will make her much more likely to be interested in talking to a financial planner type
Yeah.
of conversation, which is what every mortgage advisor or loan officer should be having with their clients.
Yeah. Yeah. Let's just be clear. If Jody has $49,000 worth of credit card debt, she's going to be looking for divorce over consolidation
Well,
because
well,
I
by the
would never
way,
do that.
and by the way, divorce is another signal
Yep.
that is something that can lead to a
Yep.
propensity score for somebody needing some kind of product.
Yep. Yeah, my buddy KP at PRMG, I don't know if it's 5 or 7 Ds, and it's divorce, diapers, diplomas. I don't know what all of the Ds are. He rattles them off, but yeah,
Yeah.
definitely a great indicator, and probably pushes that readiness score at a very high number when that is known. So
Jody,
I
if I could just
always,
give you, I want to,
yeah,
I know we may be running short on time here. I want to give like one example here.
absolutely.
Brian Gutierrez is a client of ours. He works at Neo. Um, we we gave him high scored leads out of his contact database. We gave him about 20 in 1 month. We gave him 20 high scored contacts. He
Yep.
closed 4 loans from them,
Wow.
from 20 contacts that he already owned, right? But what's actually more interesting is that there were 3 others that he said he should have been able to close, but he didn't follow up on them fast enough.
Yep.
And the servicer on the mortgager on the mortgages that he had originated actually got to those clients first. But he told us that he could have gotten those additional ones. So he could have gotten 7 loans in 1 month from
Yep.
Lendware Predict.
Yep. Awesome. Bernard is helping us out in the chat. So deployment, diapers, diploma, diamonds, divorce, death, and someone else has to come up with the other one. But Josh, one of the things we like to hear from all of our preferred partners as we look into the coming year, what's on the roadmap? What should we be looking for from Lendware? What are you most excited about starting the year fresh?
I mean, first and foremost, I think it is just collecting more success stories from our clients. Like, I think of our mission is, as I said earlier, it's to help our clients help their clients be more successful while making our clients more successful in the process. And one of the ways that we're going to do that is, I don't think that a product is ever going to do it, but by really building ways to make it easier for our clients to engage with our clients and stay connected to their clients, I think that's what's going to really help move the needle for everybody in the industry that's working with us. Yeah. We have a mobile app that's going to come out at the end of this quarter. And if you think about, I'm not sure that it's the best analogy, but think about Tinder for loan officers, and how we're going to be presenting their highest scored contacts from Lendware Predict.
Yep.
You will get 3 to 5 every morning, and you can easily swipe right, swipe left to contact each person by phone, by email, by text, in order to build that relationship as quickly and as contextually as possible.
Yep. Yep. So Lendware is the dating app for loan officers and their database. I love it. Everyone understands it. Well, unfortunately, that's a wrap. So a huge thank you to Lendware for sponsoring today's episode. Josh, thank you so much for joining us and sharing your vision for the company. We're excited to see what 2026 brings. To our listeners, thank you for tuning in. Your engagement keeps our community moving forward. Next episode is Tuesday, January the 20th at 2 p.m. Eastern Time. We'll try to be on time next Tuesday. That's for TMC members, and then 4 p.m. Eastern Time on LinkedIn for the broader industry. Special announcement. TMC members, preferred partners, Desert Disruption is less than 6 weeks away. Make sure you have your rooms. They are running out. Seats are filling up. Get registered. And thank you all for kicking off 2026 with us. Cheers, and we'll see you next week on the SIP.
Thanks, Jody.
Bye-bye.